We're going to start with brief opening remarks from each of the three gentlemen to explain a little bit about their institution and what their institution's focus on infrastructure is. And then hopefully we'll have, I've got some questions and we're going to try to get the audience engaged as much as possible. It's not often that you're going to get the opportunity to talk to senior executives at each of these institutions who are directly responsible for implementing their infrastructure programs. It also is, several of the earlier panels today kept commenting, well, we don't have Asia represented. In this case, we actually do have Asia represented with Mr. Ezeh from China Development Bank. So we'll start with James Bond talking about MIGA and its emphasis and its programs. And I think we'll just stay at our seats.
Thank you very much, Terry. Now, being called James Bond, I'm sure you know, is a great icebreaker, but I'm sure you're wondering, it's a terrible pickup line. It's not that I haven't tried it, but you say the name's Bond, James Bond, and the response comes, hell, go to hell. So try. Okay, I'm the Chief Operating Officer of the Multilateral Investment Guarantee Agency, and it's one of the three agencies of the World Bank Group. The World Bank Group is a global cooperative, a credit union, if you like, owned by 186 countries worldwide, soon by 187 if Southern Sudan becomes independent. And essentially, it is run like a bank, and we are the premier financier of infrastructure in emerging economies. Or at least we were, because the Financial Times announced the day before yesterday that China Development Bank and Chinese Exim now lend more than the World Bank Group to developing countries. Thank you very much, Mr. Zhu. So we lent about $100 billion over the last 2 years, and those two companies lent about $110 billion. Now, MIGA, the piece that I cover, really provides guarantees and insurance against political risk for private investors going to projects in developing countries, and our focus really is infrastructure. We do about $2.5 billion of new business a year. Our portfolio is about $8.5 billion. And we're about 5% of the world market for political risk insurance and credit enhancement through public insurers like CESCE, we'll be hearing from them, multilaterals like the World Bank, or the private insurers, Sovereign, ACE, Zurich, the Lloyd's syndicates. So it's about a $50 billion market. I would like, Terry, I'm not going to say very much more than that, but I am going to just point out two interesting trends. I think the first is about political risk. You know, we all knew sort of our stylized facts of the universe was that political risk was in these poor countries with low capacity, the Congos and the Croatias and so on. And all of a sudden we discovered that actually political risk has come back with a vengeance in what we thought were developed countries. And you have to point to Greece and Ireland and perhaps soon Portugal and so on. And just to give you a sense, we have been asked as a political risk insurance provider whether we would be prepared to cover for an investor going into California. Our answer was no. There's some risks that even MIGA can't cover. Okay. So, but the jokes aside, I mean, political risk has come back. It's everywhere. And it is really something that has to be taken into account as we put together the financial structures for infrastructure projects. The second trend, I think, is a very interesting one. And this is, it used to be in the good old days, stylized facts, that public projects got public financing from taxes, from the multilaterals, the bilaterals. Private projects got private financing. But we are increasingly seeing the need for private financing for public projects. We've looked at PPPs, public-private partnerships. Frankly, they haven't got off the ground to the extent we had all had hoped, perhaps a couple of years ago. There are some successes, but it's more difficult than we had thought. But increasingly, I think we're looking to private financing for public projects, and that's where MIGA sees it. It could have a role to play by essentially offsetting sovereign risk for private banks and investors. Examples, There's private money for public infrastructure. The Istanbul Metro, which has private bank financing, even though it's a municipality of Istanbul. This was supported by MIGA. Another example, the Ghana Takoradi third a tranche of the power plant at Takoradi for the Volta River Authority. Again, a public player receiving private financing enhanced by MIGA. And in Costa Rica, a toll road, again, that was financed with the 144A placement, again underwritten by MIGA. I'd just like to say I think that this may be a trend that's developing increasingly, where political risk insurance providers will enhance private financing to public projects to essentially provide the tenors and the risk profile that the banks and investors need to go forward. Terry, that's all I say for the moment, but I'm sure you'll have questions.
Great. Thanks, James. Joaquín?
Okay, thank you very much, Terry. Well, the first challenge that somebody meets when they know about us is to pronounce properly the name of our company.
Right.
I challenge all of you, mainly those Latin Americans, to say CESCE, okay? Apparently it's easy, but believe me, nobody is able to do that properly. So we have even think about changing the name, but then we realized that because of the difficulty to pronounce it properly, it has an attractive marketing mark. So, well, apart from this little joke, yeah, CESCE is a company, is a private combination of private and public company. 50.2% is owned by the Spanish government, and the rest is owned by the Spanish banks, the big Spanish banks. To give you an idea, Grupo Santander, they have 21%, and BBVA 16%, and then smaller participations. That gives us a very good combination of shareholders to discuss our policy and our strategy, because sitting in your board, those financing actors really provide you with a great opportunity to have a very open discussion and to have a very proper strategy. Not to our surprise, because it has been the case for many companies like us, in the last 3 years, once the financial crisis exploded at the end of 2007, at that moment, most ECAs like us, they were watching a declining role, a very clear declining role in the way they were supporting kind of activities abroad for their companies or of their own countries. And suddenly it happened just the opposite. We realized that the private banking community just stepped back from many projects, really a large number of projects, and we are now facing a completely different situation in which CESCE and other ECAs, with whom we talk all the time, have realized an incredible expansion in terms of the number of projects in which they participate and in the amount of funding that they have been ensuring. Actually, to give you just the figure, I mentioned it yesterday, CESCE has almost tripled the capitals insured in operations around the world. I don't know, Terry, this is a very summarized way of explaining what CESCE is at this moment, and of course I am open to answer more questions later or to get into debate. Thank you.
Joaquín, before you relinquish the mic, why don't you just explain just a little bit sort of the difference in what your product is as a political risk product from what James's product at MIGA is?
Okay, yeah, our product, as just talking as an ECA, as an export agency acting on behalf of the government, because CESCE has these two phases. Actually, at this moment, 85% of the activity run by CESCE is private, and it is mainly short-term credit insurance. Okay, so the rest is long-term and medium-term political risks mainly insured, and investments abroad. I must tell that we have created an investment policy 3 years ago, but it has not, in fact, it has been hardly used by our companies. Probably they don't think this is a good vehicle to protect the risks, type of risks, nature of risks that they run when they invest abroad. Well, it didn't come as a surprise to us, because we thought that we should have it in our portfolio of services offered to the Spanish companies. But we thought at the same time that this kind of protection was already provided by other vehicles, and actually that's the way it is now at this moment. So when we talk about political risk, it's as a long-term risk. We see that these, in most cases, are really long-term situations, 7 to 10, 15, even 15 years. The main projects in which CESCE has been involved covering political risk are mainly in Latin America, and also in, it's a very pragmatic case, is the Panama Canal. That has been the largest project in which we have been participating in the last 2 years. Now we are facing one similar huge project in which we will be covering this kind of risks, which is in Saudi Arabia, the MIGA project, which is going to be huge, but it has not been, the bid has not been solved yet. But we are really very attentive to this huge question, huge project, and in that case, it's a typical project in which CESCE comes to cover political risk also on the long term.
Very impressive. Okay, Hans, please.
Thanks, Terry. Well, a quick survey, I think we're doing okay. There's less people doing emails now than 10 minutes ago. Now, sitting next to these huge, World Bank and huge amounts that you mentioned, and then even larger amounts that he's going to mention, I feel very small. I'm pretty small to begin with, but I feel even smaller now. But the IDB is still the biggest lender for Latin America. We did, 15 billion in new commitments last year, which was a record number. We also achieved our capital increase, which was a renewed mandate from our member countries to continue to be relevant with a significant amount, but also a renewed mandate to engage with our region of Latin America and the Caribbean in addressing the major mega trends and I think challenges that the region faces in a more effective and more strategy-focused manner. And in terms of megatrends, I think I will mention two. One is climate change. There are enormous risks that we're all aware of, and I think they go into some of the products that you all offer, which is insurance and risk insurance. There's enormous vulnerability to unpredictable weather events, and there's no insurance coverage for any of that, meaning that it will translate at this point into more unpredictable fiscal expenses, social vulnerability, and also in the private sector, manufacturing facilities, properties, and so forth. Unless we find really competitive insurance products for those things, that is one big vulnerability. But there are also huge opportunities related to climate change. And so I think the region is going through a thinking process and is beginning to move in terms of changing its regulatory incentives and its environments and its frameworks, and we're beginning to see an emerging amount of investments in renewable energy and wind energy in actually many countries already. Geothermal is beginning to take off, and in some countries solar is not too far behind, which is all very encouraging. All of this, I mention all of this in the context of our strategy, because our new strategy is very focused on helping the region to embrace the opportunities that come with climate change, rather than just sitting there and suffering from the disadvantages. The other big factor is China, and I know you will be speaking right after me, but I just say two things about this. In our view, China is in Latin America to stay. It is we have to look at it as a long-term business partner. And what we see is that the deepening commercial relationship is really beginning to transfer into much broader relationships that go way beyond commercial. And the Chinese entities, not just the state entities, but also the emerging group of large corporate companies, is looking for opportunities not just to extract resources or to place exports in the region, because they're also very active and very advanced in renewable energy, and they're beginning to place those technologies across the world. But they're also interested in actually setting up production sites and working with the region as a long-term business partner. And I think some of our countries have already fully understood that and are fully engaged with them. And the IDB is engaged very much with China, helping facilitate these contacts and helping promote that investments take place, and that all of this is done in the context of a sustainable view towards what we think is a huge opportunity. Engaged in the right manner, complement very much the old partnerships that we have. And obviously, you know, sitting next to someone from Spain, I mean, Spain has been extremely engaged in Latin America. They now have some problems of their own, but they continue to be very committed, especially in the infrastructure space. A lot of the leading Spanish companies are so much in the market and so knowledgeable about the market and so much related in terms of the sources of their income to the growth of Latin America that there's no way to disengage. They'll stay and they'll be tremendous partners going forward. But we'll have to find ways to mold all of this together into a new quality. And infrastructure has to change its face. It's got to be much more energy efficient. Latin America is wasting huge amounts of energy based on fossil fuels. And the financing models, and this takes me to the last point, the financing models for some of these challenges, especially in energy efficiency, are completely unclear. In energy efficiency, you have lots of small little investments. You have a tremendous problem of aggregating those into financial structures. You have people that have to make investments but are not really interested in them because they're too small scale to focus on. They don't want the loans that come with it on their balance sheets. And they really want to focus on investments in old sectors rather than energy efficiency, because also a lot of the subsidies that are still in place in fossil fuels persist, and it makes it less attractive to do. So there's the private sector part of the IDB, the part that I'm responsible for, will grow significantly, because it's very clear to us that all of this, especially if we ever want to come a little closer to closing the infrastructure gap, has to involve a tremendous amount of private resources. We have to retool all of our PPP models. We have to look at the new partnerships in a more creative way, and we have to deal with energy efficiency in a very effective way. And all of this needs private involvement, private investment, and new formulas to engage private investment. Thanks.
Hans, is China a shareholder of the Inter-American Development Bank? Hans.
Good afternoon, everybody. And James and Hans has already spoken a lot about China. I'd like to use this chance to share some opinions about CDB, about China. So first, I think I'd like to use the chance to talk about a little about the China economies. China economies keep momentum of the growth. In the past year, China reached just a year-on-year growth rate almost 10% by the end of the last year in GDPs. 22% in the fixed asset investment and 50% in retail sale of the consumer goods. However, China economy's development is still facing prominent problems and challenges, and including a weak capacity for independent innovation, particularly great difficulty in economic structure adjustment. And particularly, and everybody knows that China has been facing the problem of the excessive liquidity, and inflation also become very more apparent in the result of the expansion of the lending in previous years. So some experts have forecast a significant decline in the house department, But generally speaking, for me, I like to suggest that we would see the Chinese economic enter into the stage of the characteristic with appropriate degrees of the microeconomic regulation and likely lower economic growth rate. But it will not change the fundamental growth trends in China, industrialization, urbanization, and internationalizations. This is one point. Next, I'd like to change information about the CDB. Some friends just once maybe visited Beijing, Shanghai, see a lot of the infrastructures, particularly recent years, Expo and Olympic Games buildings. Most of these buildings, most of the infrastructure support financing by the CDB. Just James said, CDBs do a lot of such things. What kind of the CDB? CDB is exactly like loan from the World Bank, but it's pretty new. It's established by the 1994. It is exactly the outcomes of the China economic reform and the open policies. It is focused on deal with the bottleneck of development. Exactly CDBs, just like it's very special. It's very special banks. This kind of banks undertaking a lot of the policy-related tasks, but doesn't depend on get funding from the fiscal policies. It has the function of the market, but not pursue the market profit. It has the characteristic of the financial enterprise, but represent a great intention of the government, the central governments. Is the very special. The banks, the CDBs, actively explore and improving the market economic with Chinese characteristics. By the end of the last years, the CDBs, the businesses, the focus the two field. One just explore the international businesses. The second is to do some infrastructure in the China's. By the end of last year, the total assets stand at about 5 trillion yuan, almost, I think, almost 900 billion of US dollars. Yes, that's right. The size is big changed. And it outstanding loan is more than about 4 trillion yuan. It is accumulated principal and interest we calculate at 99 percentages. It is non-performance loan ratio less than 1%, which means that CDB's performance is good in the past several years, in the past 10 years. Let's shortly introduce about the CDBs. CDB exactly in the last years continued improving its corporation governance and organization structures. This is the CDBs. Next, I just want to use this chance to some opinion, some points about this conference. I think this conference is very useful to our banks. The first point is infrastructure globalizations. I think the globalization is being closely based on the infrastructure globalization and the current economic situations. These trends appear more clear from this point. Infrastructure in Western country exact impact on the East, also just some infrastructure project in Beijing, just like super railway from Beijing to Shanghai also impact the outside. This is second point is the financing global infrastructure is big challenge to the developing country, to the CDB, to China. It's my understanding we are still lack enough experience, lack enough technologies and management. We are still in advantage of the principle and standards we need to learn. So this conference is very useful to me, to our banks. And another point I'd like to share is the infrastructure ecology is just global social and economic ecologies. We might need to realize and emphasize the different styles, social and economic model, different style infrastructure model to suit for different demands and communications. So this conference, I get a lot of things, get a lot of the useful things. Thanks.
Thank you, Mr. Zhang. Thank you. Okay, I'd like to, and actually I have a couple of sort of specific questions which will hopefully then stimulate some discussion. On the panel before the last panel, when we had the bankers up here, one of the big issues, of course, was tenors and the fact that banks, not just Caja Madrid, all banks have found themselves after Basel III with serious constraints on their on the tenors and the amount of capital that they have to commit for these exposures. And by definition, infrastructure is a long-lived asset, it was it's been acknowledged that a few pension funds have gotten into this game, but in terms of investing, but tenors are still the key to matching the economic viability with the social cost. So, James, can you talk a little bit about MIGA, what kind of wraps, what kind of tenors, how you can help somebody extend the life of the capital amortization?
Absolutely, Terry. And in fact, this question about the mismatch between tenors that are needed for the financial viability of the project and what the markets can provide, has been with us for well over 100 years. It's really one of the big problems in infrastructure, and it's one of the reasons why governments are needed somehow, either directly or through guarantees or through a multilateral like MIGA, to get involved to allow this market failure to be corrected so you can finance the infrastructure. In the case of MIGA, what we can do is we can lock in a regulatory position or a contract that a provider or the bank has for 15 to 20 years. So we would be prepared, unlike the private insurance markets, who like the financial markets, can't do more than 6, 7, 8 years at the maximum. Because we're a multilateral and because we're owned by governments, we can provide a guarantee to banks, to financial institutions for 15 to 20 years. It's not going to solve all the problems, there are many other problems, but certainly we do need some kind of a public response to be able to cover those kinds of periods. And we'll do it with no option on the MIGA's side to be able to cancel. We cannot cancel. The purchaser of MIGA insurance can at any time cancel with no penalty, but we are locked in to that commitment we've given the financial institution for the full 15 or 20 years.
I'm going to share a reflection on this question. Traditionally, the way we have tried to help this particular issue is offering AB loans where the IDB puts capital out on the debt side of the projects, and then attracts additional capital basically through a syndicate of banks. This is still an active market. It is a smaller market. It requires higher margins. It probably has a more contracted tenor right now. But we see that in some segments of the market, some of this capacity is returning. And in addition to that, what we've done in the last 2 or 3 years, ever since sort of the crisis really started unraveling, we've been working on this idea of new partnerships. So we've been able, for example, to draw JBIC into a major road financing in Brazil. Very long term, the same tenor that we went, and so forth, but even larger amounts on our own loans. And we'll be very happy to very soon, within the next month or so, to announce the first airport project in Latin America, where China Exim Bank, or China Development Bank, one of them, will become a major co-financing partner. And so the idea of new partnerships, attracting other sort of funds that are out there, can be allocated long-term, is something that we're trying to establish. In addition to, of course, what John said, what James said, which is, really we have to find ways to break the code on local capital market developments. You have these funding possibilities, but the risk allocation mechanisms are not working. The liquidity is no liquidity in the secondary market. So it's that we need to crack the code on that one.
Joaquín, any comments, thoughts?
Yeah, thank you. Well, yes, the way we see it is that increasingly ICAs are demanded to participate in this kind of operations. And as James was saying, this is the story of this kind of problem. It has always been like that. And I personally don't think we are going to find or strike the right solution out of the blue from nowhere. So we know the nature of the problem, and somebody from the floor asked half an hour ago or something, what should we do to seduce investors? Well, I mean, if you want to seduce bankers, I believe that the role is extremely difficult. So we better go and we start looking for alternative sources of financing, because the bankers and the banking community will ask guarantees, and they will ask stronger and better studied guarantees progressively. From that point of view, we feel that when we are studying an operation, a project, and when we are working together with the bank or the banks who are part of the package, of the financing package, they are not only asking CESCE, our company, to propose or to put available the guarantee, the insurance, but they are also looking for our expertise in analyzing the full operation. And we see that this is a value added that is, if I may say, is valued more and more every day. Because banks, sometimes they don't have the tools, they don't have the expertise to analyze the political risk, or not only the political risk, but also the financial risks of the counterparts. In that sense, when you are dealing with projects in which you have not sovereign, but sub-sovereign debtors, then it's not easy to analyze the strength, the solidity, the financial solidity, and also the capacity to perform properly. So I would add that one of the issues or factors that may help to find more finance, or at least more easily, and to attract and to seduce these financiers, is to improve the way we analyze the risks and the way we propose to protect against those risks.
So, Lixing, is this model that Hans mentioned of CDB coming in as a co-financing partner with IDB, is this a favorite approach to deal with exactly what Joaquín was just talking about, which is how to assess the local risk?
Yes, local risk and the political risk. We do not have such about this kind of risk. We exactly, the CDBs offer a very good solution to answer how to license enough money to support mid and long-term infrastructure through market, and the disadvantage of the total amount of money, structure, and terms. Definitely, so we need support from the local government. We need to get support from the government, the grant department. But infrastructure development is totally different. Sometimes totally different the goal of the government is sometimes is different. So we usually use the market function to solve the question, to build the bridge between the government and the market, between in the price and the market. I think the CDBs do a lot of things about that things. Yeah, okay.
Thank you. Okay, before I get carried away with more questions up here, I don't want to hog the show here. We've got, kind of. So from the floor, let's have our Brazilian first, and then we'll do this one over here. Okay, thanks.
Well, I do appreciate what have been presented. It's very encouraging for investments in Latin America mainly. James raised a point, a very important issue related to the mismatching of tenors. But in order to enhance projects in Latin America, we are facing a huge difficulty on the top of the tenors. They are linked to the local currency, the mismatching of the sources of revenues of the projects and the financing and the dividends for the investors, foreign investors. Some of your institutions are already doing an effort on local currency, and I would appreciate to have your vision in the new coming years, what your institutions are going to do. Thank you.
Good question. You know, we've been facing this since the dawn of multiple currencies, but there have been quite a number of things that each institution has done to address currency risk. James, we'll start with you.
Yeah, sure. I mean, this is the other big problem about foreign financed infrastructure, is the mismatch between the revenues, which are going to be in local currency, and the need to service a debt in dollars or in euros or in yen, whatever it might be. And again, there's absolutely no magic bullet excepting tapping local domestic capital markets if they exist, and of course in many cases they don't exist. You may be better off in Brazil where there is a capital market, but if you're thinking about Rwanda or Tanzania or Ghana, it's going to be much more difficult to tap into those. So this does exist, and to be frank, it's not easy to fix. The best ways, and again, Terry spends a lot of his time thinking about this, is to basically have agreements between the government where there are currency adjustments written into tariff formulae, into concession payments and the like, and these would then take the form of a contract. And the contract, again, you can use regular insurance mechanisms to try to backstop it. Again, it doesn't always work. Argentina had many private power projects, IPPs, some of which we've all worked on, haven't we, Terry? And when they left the PEG in 2002, they reneged on all the power purchase agreements, and those are actually still in arbitration 8 years later. They haven't been resolved. And this was exactly the problem, was that they had committed to pay amounts in dollars and in euros that they were unable then to honor, given the fact they had changed. So the best way is always to go for domestic capital markets. Unfortunately, the best way is often not available given the extreme lack of depth of the financial markets. It'd be interesting to hear some of the things that, for example, our colleagues in the Inter-American Development Bank have done, or even whether CESCE has also experience with this.
Mm-hmm. Yeah, we're fully aware of this issue burning right now, especially in Brazil, with the revaluation of the currency and the whole uncertainty about currencies generally just adds to that. And there's a lot of infrastructure players that have these mismatched positions and really are desperate to get out of those and find instruments to hedge those in a more efficient manner, not with all the swap costs attached to it, because that's extremely expensive. What we offer is guarantees in local currency, but it requires that someone in the local market actually provides the financing. And if you go to the local banks, you probably end up with a bank that would be financing this in any way, if they are willing to do it. You can get up to 10 years in some markets. We have seen in Brazil you can get definitely up to 10 years for some projects. But you have a capacity issue because the big money is sitting with the institutional investors and that is not being deployed. It's actually easier for countries like Brazil and Mexico to attract pension fund money into equity than into debt for project financings. Mexico recently went through a reform and they now have a new instrument in place which was already used once or twice for toll road financings, and one takeout financing from the FRAC 1 transaction was already carried out, but it's all equity. So that's actually easier than to attract those guys into holding long-term debt paper in the books without a secondary market, without a way to trade it. And even though we could provide a guarantee on it, and I know BNDES is extremely active, and without BNDES in Brazil, things would be really difficult, right? And maybe Banco Nordeste, you know, if you take out all the development banks in Brazil, it would be a very, very different game. So Brazil is lucky to have this, and it's part of the strategy, of course, of the government strategy, but it cannot do everything. And the big pools of pension fund money are not being deployed into those things. I think primarily because there's no secondary markets. Because even though we can provide sort of a risk guarantee or a partial risk guarantee on the ultimate underlying project risk, they would still sit on the paper for 20 years. And they don't like that. So I don't know if you want to add to that.
On this field, I don't have much to add to what Hans or James have said, because the experience of CESCE is, to say the least, pretty poor, in the sense that we are not very much, well, actually the request by our companies has not been very strong in that field. So all what we have done is 2 years ago we have approved the possibility of providing this insurance based on local currency, and we did that as more than anything as an experience with Mexico. And so far, well, because of the financing there was not the key problem, it has proved not to be a key question for us.
Sorry, I should probably say one more thing. We do offer in local currency, we do offer financing in local currency, but in order to fund it, we have to go ourselves to the swap markets. But we are comfortable with the tenor, obviously, and we are AAA institutions. So if there is a competitive swap rate at the time a project requires funding, we can do it in local currency, and we have done it at times. But you have to have the right timing. So when the time, at the time the project needs the disbursement, you've got to be able to swap it in the market. We've also issued a few bonds in local currencies, but we don't have treasury in local currency. So if you issue a local bond, you don't have the project sitting ready, waiting for disbursements, you got to swap it back into dollars. Right? It doesn't help very much. But we have found a few situations where it works, and then we have provided in local currency too.
Lixing?
We also do some experience about the questions. We want to create a new way to handle this kind of the questions. Just portfolio financing to integrate all resources, including the local currencies and foreign currencies, integrate all, and uniform the management and assessment, and also coordinated operation in none of the structure, economic structure to handle this. We find this, we get out some good result from this the new way. Yeah. Okay, but.
Okay, we've got a question back in there.
My name is Emeka from Nigeria. I just realized, like I complained yesterday, that perhaps Africa was not the focus of this conference, and perhaps that's why we don't have any project. And everybody knows that if there is any place that we need infrastructure, it is in Africa, and especially Nigeria with a population of 150 million black people. I want to know, both to the investors and to the fund sponsors, what changes will you want to happen in Africa, especially in Nigeria, because there is this attempt to group Africa as if it were a country. We have French-speaking African countries, we have English-speaking, we have Portuguese, each of them relating with the colonial masters, with different political structure, different legislations that makes working together as a continent difficult. And so I want to know from here, what changes will you recommend that we go back home and try to drive and put in place that will enable the investors to be interested in coming to Africa, especially in my country, to fill the gaps that are yearning for investors. I want that because that will help me a lot, because right now we have about 4 or 5 dam projects, hydroelectric power projects that are ready. We have a rail infrastructure that was built by Britain in 1914 that has not seen any rehabilitation, and it was built as freight rail. But right now we have challenges that come at us. We have several of such airport facilities that need to be developed. We need the seaports that need to be developed. And apparently nobody's interested. I said, what's the problem? I want to know. So that next year we will package them. And so it will be part of the 5th global infrastructure conference that will be discussed next year. Thank you.
Thank you for the question. I would like to point out on behalf of Norm, who pulled this together, African Development Bank was going to be on this panel. Unfortunately, because of the issues in Tunis, they were not able to travel. They were on, there was quite a bit of interest this morning at a very early hour, pre-dawn hour, here in New York, for people to be able to talk with African Development Banks. So I don't think it was intended that this conference ignore Africa. I also, before I turn this over to James, because MIGA is definitely doing business throughout the entire continent, I have a personal anecdote. I can remember in the mid-90s running seminars on behalf of the World Bank group, trying to provide overview of best practices in the independent power project business. And we were very active. We did a couple of 100 power projects in the 90s all over the world. And I can remember we had this session. There were about 30 countries in the room. They each had sent 2 representatives, and we had Indonesia, and we had Thailand, we had Malaysia, we had India, we had Pakistan, we had Turkey. We had virtually everybody from South America, and there was one poor chap from Uganda there, and he practically started crying halfway through this. He said, what can I do? Look at all these big countries. What can I do to get anybody to come and pay attention to me? We gave him a very long outline. Uganda worked with the World Bank Group very assiduously for 5 years, and lo and behold, within that period of time, investors came, investors put money down, and they had an African, a Ugandan independent power project with international investment in it. And he was there at the ribbon cutting ceremony. He was so proud. So I, first of all, welcome this kind of interchange, and secondly, want to let James address this a little bit more directly.
Thank you, Terry. I mean, the focus of the World Bank, and in fact, generally, the development community is really Africa. The needs are enormous. You're absolutely right. Africa needs about sub-Saharan Africa needs about $100 billion of investment every year in infrastructure, huge amounts of money. And I would say that the African Development Bank, which also, like the Inter-American Development Bank, got a major capital increase. Our own focus in the World Bank has really been to focus on Africa, and they're increasingly things like private equity funds, the CDC fund of funds, you get the Pan-African Infrastructure Fund based in Johannesburg, focusing on infrastructure in Africa. But it's not easy, I'll be honest. We're doing quite a lot. We're looking at 6 power projects in Kenya. We're closing on a power project in Rwanda using the gas from Lake Kivu. We're looking at the Kribi power project in Cameroon, and the World Bank has just funded the major 4,000 megawatt power project for Eskom based in Botswana. So there is a big effort. Why doesn't the private sector pick this up? These are great returns. This is where the need is. Well, the answer is it's not easy putting together projects in Africa. It's necessary, but it's not easy. The countries tend to be small, so there's a power project in Togo, but Togo is tiny. It's 50 kilometers wide. So we have, if you like, a geographic problem. The spirit is willing, but they just don't have the capacity. And so it has been that the private investors have tended to go where it's easier to get the projects done quickly and where they tend to be larger, and that's Latin America and Asia. So there is a kind of a market failure here that we all recognize. We encourage investors to go to Africa, but let's face it, I've done that for the last 25 years, and it's a long slog. We succeed, but it takes a lot of willingness on the government side and a lot of effort from the partners of the countries that want to develop. I hope that kind of answers it.
Yeah, I think that's right. And just, I would have one more comment. I'd be delighted to talk to you after this panel is over. We've just agreed to act as a financial advisor for privatization of part of the power sector in Nigeria. And we thought long and hard about whether that was something that would be worthwhile. We know it's worthwhile from the Nigerian side. We were wondering if we were going to be beating our head against the wall in terms of raising interest in investors. And I will say that the initial indications for road shows in places such as Dubai, Joburg, here in New York City are very encouraging. So I think there's still opportunity to attract private sector investment into sub-Saharan Africa. I know that we are past my time. The boss is over here about to give us the hook, so I want to thank you for your attention. I want to thank this great panel that we had, and I think we'll all be available during the lunch period. Thank you very much.